some questions that came up about we have I'm doing my show, live show. It's a live streaming show. It's a call-in show called In the Zone with Victor Bell, where I go into my own zone about what I want to talk about money and finance. And then we also talk about real estate. So this is one of the questions. We had somebody who is in flips houses as a real estate investor or is in real estate flipping houses. That's a strategy. And they were like, hey, why do you say that flipping houses is not being an investor? Well, flipping houses is flipping houses. Being an investor is investing money into a multifamily property or whatever that is, and that money pays you. If you are flipping houses, you are doing transactions and you got to find a place, go clean it up, sell the contract, whatever it is you do, turn around and sell that to make money. That is not investing. That is flipping or being transactional. And you'll know that because if you stop doing it, you stop making money. That's the answer to that. Next question. Let's see, what do we have here? What is your biggest mistake that you made investing in multifamily earlier on? I have two of those. One, starting low. Instead of buying low and selling high, which is what we're all taught as real estate investors, I should have been buying high and selling higher. That is the thing, because every deal that I passed on back then that I thought was too expensive, I should have made an investment in. I should have went and did it. And had I done that, I'd still have those properties because those properties quadrupled in value instead of the ones that I looked at that maybe I did good in them, but I never did as good as the ones that at the time I thought was too expensive because I was taught buy low, sell high. And the real name of the game as it relates to making millions of dollars in real estate as an investor and fund manager syndicator is buy high, sell higher. Stop buying beat up, fixer upper properties and hope to make a profit. Just buy something nice, park your money there and wait for that property to actually go up in value. That is the new game. All right. That is one of my biggest regrets. So next question. Let's see. In real estate, I was taught smaller is better. Just go small and work your way up. You know what? That is also a myth. Starting small is not better. Most of the time, people tell you that because they're afraid they tried it or they never got started at all. Starting bigger is better. Bigger is always better, right? Bigger hotel, bigger car, bigger plane, bigger chairs. Everything is bigger. Everything that's better is always bigger. So why would you start there? Look, I get it. You start where you're at, but start at the biggest level if you're going to start as an investor. You don't have to do everything by yourself, which goes back to one of the mistakes I made. I should have had way more partners than I did. I was already doing the work. I would go find the deals, fund the deals, manage the deals, bring in my investors, and we would split the profit, which is what we do at Bell Capital. But I started small because that's all I could think with at the time. Then once I started studying more successful people, none of those successful people started small. They all started big, right? It was just the exposure that they had. They were exposed to raising hundreds of millions of dollars early because that was the world they were in. But if you're a middle-class person and you're starting a business listening to middle-class small thinkers around you, they're going to say, start small, just go get what you can handle, things like that. Don't go get what you can handle. Go either pool your money with other people going after something big or go as big as you can in the beginning. You'd rather learn and get exposure to a big deal than starting small, trying to work your way up. And let me tell you a secret. You go to the bank and you do a bunch of little deals, they're going to be like, yeah, you need more experience. Even if you have 100 little deals, that's not experience. You got 100 little deal experience. You'd rather have one big deal experience than 100 little deal experiences. So for real estate, small is not better. Bigger is better. Bigger is always better. Don't be confused. All right. Let's see one more. The other question, what was your other thing? Oh, I'm trying to work to be debt free. You do not need to be debt free. As a matter of fact, if you want to create wealth, you need to be debt heavy. You need to make sure that you have the right debt. It needs to be debt in assets, not debt in liabilities. But the debt, you need debt. Debt is good. Right now, the debt market's crazy. But when we're looking for multifamily assets, the first question is this able to sustain a debt for 10, 20, 30 years? And if the debt person, the lender, the insurance company, or Fannie Mae, Freddie Mac, or a debt fund is not interested in it, they don't want to actually move capital towards it, which is debt, I don't want the deal. So don't focus on being debt free. Make sure you acquire assets or invest in assets that have debt, because debt is actually good. It gives you leverage. That's why you hear me say all the time, if you were to invest $1 in real estate with leverage, good leverage, which is debt, That's like you can buy $3 worth of real estate with $1 because of the debt. That it's not a secret. Your mommy and daddy and mine's too, we're all working to get out of debt because they were trapped. But if you're talking about creating wealth, your job is not to get out of debt. Your job is actually have good debt associated with the assets that you are investing money in that pays you, right? So I hope that answers those questions. I wanted to make sure to get to these, but make sure you subscribe to the YouTube channel. We're going to be doing a live show every Monday on money and finance and every Wednesday on real estate. That was kind of a blend of these two things, but I wanted to make sure to answer these questions. Make sure to like and subscribe. Make sure to show up for the thing. If you have questions, leave them in the comments or show up to the call. We'll have a call-in number. And I'm looking forward to seeing you Monday to talk about money and finance and creating wealth, and Wednesday to talk about investing money in real estate and how to multiply your money through that asset class, which is what we do. And we'll talk to you soon. Let's get after it. Let's go. See you in the show.